All right, this is your market recap for March 31st, 2025. Today being a Monday, especially with a discount opening like we had today, looking to continue the bearish move that we started last week. But before we're able to do that, we have to play bullish. So that's what we did today. If we get down to the hourly, we can see this discount opening here. We we did accumulate until New York session, and then market opened, came down, manipulated down, took out this low, which is this low over here. Immediately came up off of that, playing bullish, reaching for equilibrium of this bearish move right here, which is this orange line right there. Now if we go down to the 15-minute, we can see easier the relative equal highs, which are the target for AM session in my opinion. We come down, so let's start here. 9 o'clock, still accumulating. 9:15, still accumulating. 9:30, we draw all the way down here, taking out this low like I showed you on the hourly. We then, during the macro, we reverse up, reacting off this 15-minute, but with a higher time frame in mind, we know that this is more than a retrace and that it's a higher time frame retrace, so we're actually looking for higher time frame liquidity here. So we get stuck, but we find this 5-minute, which you'll see once we go down to that time frame, and we take most of AM session to get to these relative equal highs. Well, actually, all of AM session. It was a no news Monday, so this, I won't call it slow, but I'm going to call it slow price action to take effect, right? So we get up to this high during lunch. The reason we did not reverse during lunch is because AM session was so slow. Usually lunch reverses when AM session has a huge expansion, but since today we didn't really have a huge expansion. We had an expansion, a retrace, an expansion, a retrace, an expansion. So what's called for is a retrace, and we do get that to this 5-minute, as you can see here. But there's no higher time frame like hitting that low like usual. So we get another expansion up to take out these highs, and then we kind of go horizontal for a bit. Algorithm kicks back in, we sweep this low by like a couple ticks, and then we get our last expansion all the way up to equilibrium, which appears to be the target of the day. As once we hit it, we kind of went horizontal and started to come back down to end the day. Now in the 5-minute, you can see the accumulation, right? So with this accumulation and a bullish high time frame draw, in my opinion, I was looking for some sort of sell side manipulation. Yeah, this is exactly what I was expecting. Unfortunately, I was 5 minutes too early, and I did learn from that, but I was 5 minutes too early to catch this trade. Bias was right, trade idea was right. I was too close to the macro. Yeah, you'll see it on the 1 minute. So once again, macro, we get this expansion, come back down, react off this 5-minute here, another expansion. You can see what I was talking about, right? It's a no news Monday. It's not fast price action, but it's directional, right? It's going upwards. But you can see we get boom, expansion, retrace, and then we kind of just go horizontal. Expansion, retrace right at the start of lunch. So you don't really need that usual higher time frame, coming back to equilibrium of lunch because, well, it's all already covered. So because we don't have to do that retrace, we continue higher, taking out these relative equal highs over here, right? Then we go horizontal. That's our lunch target is what I see it as. And then algorithm kicks back in here at 130. We come down. Let me take this out so you can see it. Take this out and zoom in. See this low here, swept right there. And that's very common if price is going to continue AM sessions move, it does usually take out some sort of opposing liquidity, which in this case, since we're playing bullish, was sell side liquidity. So we get an expansion, retrace, and then a big expansion right here during the macro. Once again, to equilibrium of the higher time frame bearish move here. Now on the minute, we'll go over my entry. So like I mentioned, I was bullish, right? I saw this manipulation down, and I saw it as manipulation, not a bearish move. Took out liquidity, right? And so we took out this liquidity, came up. I saw an SMT of these lows, right? So we took out liquidity. I saw an SMT of lows and this pretty big rejection off of it, which led to a 15-second change in the state of delivery. So I entered off the nearest 15-second fair value gap, which was somewhere between these two candles, and then obviously I got no, actually it was here, and then obviously I got stopped out. And I think the reason for that is because the move was originating so close to the macro where price wanted to go down. It's a time thing, right? The macros are usually the lows of moves or the highs of moves, but in this case, since we're playing bearish and high time frame bullish, that reversal where it stops going bearish and switches to bullish is to be expected to happen around the macro. And it does, right? It does. So I will be observing it, but from now on, within 10 minutes of the macro, so let's say trade opportunity presents itself at 40, I'm not going to take it until the macro hits, because odds are the macro will give some sort of entry opportunity, right? Other than that, I can't think of any other reason why this wouldn't be the low, but this would, other than time. If we look, we started going down at 9, so macro pushed us down, took out the low. Usually, if we start moving at market open, price usually reverses around the macro, and which is exactly what we did roughly here, right? Market opens, gives a little bit of bullish movement to trick people in. Then we come lower, so the bearish move starts at 9:30, sorry. Then, during the macro, give or take, we reverse, tiny SMT down here, which gives us that trade, right? It gives us the green light to trade. Get this, on the 15-second, there's not much here, right? There's no inefficiencies, but we see this fair value gap right here, bearish, rejected here, so validated. And then as soon as price closes up here and re-enters there, that's when we're in, right? So this right here, stop there, below this low. My profits extended, I think they were all the way up to this. But with how long this took, I probably would have just capped them at this, which is still great. It's still a 1 to 8, right? I would have loved it, and it would have hit. But unfortunately, I entered 5 minutes too early. But now we know in the future, within 10 minutes of the macro, if price, I don't know if it's 10 minutes of the macro, but if price starts moving in a direction at 8:30, it is likely to reverse around the macro and not earlier. Unless it happens within the first like 5 minutes of market open. I think if it's an extended price run, because I mean the only times I've seen price reverse not at the macro was at like 35. Say for example, this happens. We come down, first couple minutes, we take out these lows, and then we create an SMT down here and reverse by like 9:35. Then that's good because the macro would cause the retrace. But since we're all the way down here, this is 8 minutes to the macro, give it time, right? So things to learn from in the future, but this would have been the trade of the day, 100%. We then get an SMT of these highs, right, which on its own doesn't tell us much because it could, this is where the liquidity is. And so it could reverse here, but it could reverse up here or up here, right? So the thing that tells us that this is going to play bearish, and this is also a trade that I was looking at, is this SMT here, these SMTs of highs. So we would have taken this short. Once again, because of the macro, we did come up here, SMT there, starts the move, SMT here as well, taking a short to this 5 minute right there. Then we hit this 5 minute, another SMT. I'm going to say this a lot, but I actually did almost enter on this. I was calculating the lots, but then I said, no, I already lost today. Sit back, observe, and just study. So we get this SMT here. Why, you might ask? Well, if we are high time frame bullish, here's equilibrium of this bullish move. In this 5 minute fair value gap, SMT, change in the state of delivery, boom, that would have worked, right? Another SMT here. Saw this one during class. Long to take out these highs. This one as well, that's what you can see where with the reason lunch didn't retrace super far is because we hadn't extended, right? Equilibrium, so this is, as far as I'm concerned, balanced. We're here, this whole range here is balanced, so it's going to take a big move to get through that. Get another expansion, come back down to this 5 minute, another expansion up here. During the macro, we start playing bearish to retrace after taking out these highs here, these relative equal highs. Then we create another SMT here, playing bullish once again to take these relative equal highs. Another SMT short past equilibrium. Perfect. And then we play bullish again. And then at this point, we are close to PM session. PM session opens, gives us a little rally. Then we come down, take out this low here. I would have been fine taking out this low, but we took out both of them. Then we started playing bullish. Unfortunately, no SMT, so this could not have been caught, but it did end up reaching all the way up to our target on the day of that equilibrium of this big bearish move here. So, all in all, today was very successful in terms of trading. I read the markets almost perfectly for every single reversal, every single retrace, whatnot. It's just unfortunate that I entered too early. And I'm not upset about that trade, right? It's just a trade that shows my lack of experience. But now I have that experience and I can use it in the future. So there's another trade that I will not be taking in the future. By which I mean I will know to wait, right? If we make the mistakes now and we don't make them later, that'll exponentially increase our win rate. So higher time frame. I might want to see another candle, another bullish candle. Because on that expansion, the expansion that we just hit equilibrium of today, we obviously hit equilibrium. But this bearish move of last week, we haven't. There's this accumulation here, and this fair value gap, and equilibrium here. Now, would I be okay not reaching equilibrium? Yes, I would. But I'd like to reach a little more up into this range here, and this fair value gap. So would I be okay playing bullish again? Absolutely. Absolutely. But would I be okay playing bearish? Yes. It really all depends what market gives me between now and then. What it tells me, what it has, because we can see obviously this range here, which is going to be really hard to get through. And I think that we're going to try one more time, but we're in the end going to fail to reach it. But again, those are just speculations. At the end of the day, we're going to take what the market gives us, right? So this has been your market recap for March 31st, 2025.